Hi folks, welcome to another clip here on my YouTube channel. Just because it's the first clip of the year 22, I would try to send out a very belated Happy New Year wishes. All the best and of course luck and far more important, a lot of health. Alright, today let's speak about the Euro-US dollar and the possible moves into the next month to come, what is going on with the technicals, and furthermore what is going on with the fundamentals. Before we get started with the technical analysis, I would simply advise you or simply put in something like a small ad. There is a red button here at the YouTube channel, at the YouTube platform here, and you simply press it and you'll be a member of this channel. Very much appreciated if you do so. On top of that, you could leave some thumbs up if you like. Thank you very much in advance. Alright, let's go and have a look at the technical analysis right now. Before we get started, you see this is a new chart technical analysis, a new picture, not familiar with the ones you saw the last year. So this is the chart technical software from guidance. As you can see, there's a button implemented in here, and you will find out a lot of things more at www.guidance.com. Needless to say that I'm absolutely thankful that they let me use their chart technical software to present you that kind of analysis today. All right, this is a 1 year picture of the Euro-US dollar rate. You'll see that is a 100% fib point at the 123.494, which is from 6th of January 21, and this goes down to the 25th of November 21, which is the low at 111.835. So these two levels combined, as usual for Fibonacci analysis, and the chart technical software is giving you a couple of retracements from the current action around here to the upside as well as to the downside. So the typical ones, 23.6 for example, 38.2, 61.8 or 76.4. To just find out a couple of possible targets to the downside from the current level, you have the possibility to use another Fibonacci analysis. I just used that red colors just to mark them a little bit more visible in comparison to that white ones from the bigger picture here. You see the 115.20, which is the first point, the 100 point, and going up to this high from this 116.92.4 at the 0 point. So there are a couple of projections to the downside. As you can see, there is the 114.14.3, this is the 161.80 projection. And you see there's a level of 112.42.4, which is a 261.8 projection, and another projection to the downside would be the 110.75, which is a 361.8 projection. Further down the road, of course, possible things like a 423.6 projection and a couple of others you can simply add or delete from the chart technical picture, as you know. All right, there are a couple of green and red additions right here. You see these two arrows to the upside and one arrow to the downside. So the two arrows to the upside, first of all, there is a neckline. As you can see, this neckline right here in an area of 115, 115.20s, 115.30s, and this is just the reason that I just implemented that one here as a possible target to reach back to this neckline and then possibly to dive back down again. Another retest of another bigger neckline could be the next one here, which is around the area of the 116.60s until the 117 directly, with a couple of points. You see there is a low right here, a couple of lows right here, and a double top right here. So these levels combined give you something like a 116.60s to the 170 area, which is possibly something like in direction of 116.80s to 116.90s as a median target to the upside as a second bigger target. The target to the downside possibly, first of all, there's a ascending trend line right here, and that could be something like a retest of that one. And to see that red area down here is just the area around the year low of 21, so the 111.83, and a possible target is the next rejection to the downside, as I spoke about that already at 110.75. That's the 361.80 projection. There is a relative strength index on top of that to be added right here. As you can see, this is in a neutral territory. You got both lines. The red one is showing you the oversold area, and the green line here is showing you the overbought scenarios area. So as you can see, this is still neutral territory, and the platform right here gives you the hint that is 58.12. So right now, not overbought and not oversold, it's neutral. Let's check out some fundamentals. Of course, the big surprise in the current year 22, and furthermore in the change into the year 23, will be the ECB. Because if you just compare the both central banks, the Fed and the ECB is of course less active right now, and you don't hear that much from the ECB like you do from the Fed, for example. So just from my point of view, maybe you think it's totally different. But anyway, you saw a couple of Fed officials speaking about the current situation regarding inflation, regarding more real negative yield. And if you compare that, the real negative yield in the US is down more than the one in the Eurozone, just because of the rates of inflation. That's the only thing. So somehow it's maybe just a funny expression to choose between pest and cholera if you think about the euro or the US dollar, which is better regarding the point of inflation. So anyway, look in the future in the next month to come, and you will see that the Federal Reserve is at action point in March. So March 22 will be the first target rate liftoff. So that's what the markets, the futures are telling you. So the Fed funds futures regarding, for example, the Fed watch tool. And you will see, I have a cheat sheet. Let me just check that out. It's 82% of a probability that the rate in the March 22 FOMC meeting will be hiked by 25 basis points. So that's the first step. The next one will be possibly in June, which is at a probability rate of 79%, above 79%. So already we will be something like a target rate between 0.5% in direction 0.75%. So another liftoff, the second one. So the third one will be possibly something between November or December 22. So a third hike, which is at the probability of 72% in direction of these 2 months down there, to another hike to the Fed funds rate to 0.75 to 1%. So these are 3 hikes for the current year. A couple of investment banks already spoke about 4 hikes. So if you just check out the saying from experts from Goldman Sachs or as well Deutsche Bank, just to name 2 institutions regarding foreign exchange trading. In the next year, 23, they are talking about another 3 hikes. So if you just add that up, sum that up, you'll be reaching levels between 1.25 to 1.50 as a Fed funds rate. So just saying, this is the scenario we saw the last weeks, and this is the scenario we see for the current month of January and the month to come. Actions could be taken, actions could be just taken away from the market as well, just by saying. From one day to another, maybe there's another reason just to smooth it or to push the first rate hike into April or whatever for some reason. Name it Omicron or name it whatever the heck. But it's always possible. But the kind of a floor, the kind of a hiking process is already set. And there will be something like the typical interest rate scissors. They are widening between the US dollar and the euro. So the more they are widening, the less it makes sense, just from the logic, that the euro is going to be stronger. So there's a possible test to the upside right now. I just took that kind of a neckline at 115, 150.20 if you just check out the chart again. And then we could possibly dive back down again. Just saying, this is of course nothing like Merlin's glass ball, as I always tell you. All right, just the facts, a couple of fundamentals, and of course, last words, typical. I wish you a fantastic new trading week. Remember, Wall Street, NYSE is closed, Martin Luther King Day, so possibly less liquidity. But anyway, a fantastic trading week ahead, and all the best, and see you next time. Thank you very much. Bye-bye.